All right. Welcome to Founders and Fortunes. I'm Ryan Austin, today joining you from the Core Club in New York City. And I'm with Paul Gonzalez, former CEO of Alto Capital. Paul, thank you so much for joining me today.
Thank you, Ryan. It's a pleasure being here.
Great to have you. And so just a little bit of background. Paul and I met a couple months ago in Zurich. I was on a roadshow with my client, Legacy Capital, and we met with Vortex. They were putting the event together. And we really hit it off talking about family offices, governance, being advisors, erudite advisors, and the work Paul has done, which I find super interesting. So, Paul, if you could give a little bit of background and your origins, where you come from, and
Sure.
the work you've been doing.
Sure. No, thank you, Ryan. So I hail from Venezuela, Maracaibo, Venezuela, to be exact. I grew up just north of here in Scarsdale, New York. Been in finance most of my life, buy side, sell side. Educated here in New York, and about 15 years ago made the decision to move my family to Switzerland, and I'll probably be back towards the end of the year or early next year, God willing, in the New England area. So
Big move.
yeah.
So-
No, it's time to focus on the family.
Yeah, and there's a lot I want to jump into, but tell me a little bit about the work that you've been doing at Switzerland, and then some of the work that brought you back here
Sure.
to the U.S.
Oh, thanks. In Switzerland, joining JP Morgan's wealth management team covering Latin America, I worked with mostly families from Latin America. I did that a few years at Credit Suisse as well. And 4 years ago, we decided to set up a family office in Switzerland, catering to few families, getting involved in corporate governance work, doing investment policy statements, and really deepening the relationship we had with a select few families. We would do the financial advisory portion, which is becoming more and more of a commodity nowadays, but getting into the weeds of the family dynamics, the psychologies behind it all, is where I think the value add comes at the end of the day.
Definitely, and so let's just start there then. Talk from the governance standpoint. What is the difference between American family offices and then European Swiss family offices?
That's a great question, Ryan. I think the word family office means different things to different people. So It's very difficult to generalize. But my impression is, having seen both sides, is that, there's a little bit more entrepreneurship, risk-taking in the United States. I think families, some are obviously looking to preserve capital, but you have others that are really looking to grow capital. As the second, third, and next generations get involved, the focus is on growth. I think in Europe, most families are pretty content in preserving wealth. And I think that major difference of what you're trying to solve for causes your DNA, or the DNA of the family office, to be quite different.
So interesting. And do you think, obviously there's a cultural component to that, right? But from the American viewpoint, I think that families in Europe, a lot of the time, they're hundreds of years old. You don't get that so much here. And it's typically, we were talking earlier, 2-3 generations, 4 if you're lucky, right?
Yeah.
What is the reason you think that there's such a difference between the way these different family offices operate?
It's again an excellent question, I think, and just to give you a few numbers, 30% of family businesses are successful in the second generation. That number comes down to 13 in the third generation. That number goes even further, down to 3% are actually profitable and going concerns upon the fourth generation. So that means 97% of businesses, at least in the United States, right, don't see that fourth generation. I think if you preserve wealth, if the focus is on preserving and not multiplying your wealth, you probably make less mistakes, and the percentages increase of businesses that actually last. But I think the mere DNA, if you look at the government structures, the social net that's available in Europe, that has a lot to do with it. I think, I've been an employee of an American firm and a shareholder of an American bank, and I've been an employee and a shareholder of a Swiss bank. Would much rather be, and again, generalizing, a shareholder of a U.S. firm. It's much more dynamic. It's much more focused on profits, whereas there is a social component that I think has some positive effects on society and the overall country. But if you look at it from a purely investment perspective, I think it's a handicap.
So, and really interesting. And let's go a little bit further on the banking side. I know that's where your expertise really comes from. What are there more differences too between U.S. banking versus European banking or Swiss banking?
I think there are, and there's even a major Swiss bank now potentially looking to re-domicile here into the U.S.
Right.
For capital requirement reasons. But I think there's a level of bureaucracy in Europe, and I think over the past few years that's been highlighted on the public side by both parts and regions, where there just seems to be a lot of red tape, a lot of bureaucracy in Europe. In Switzerland, I think this is also the case. And
I feel like, yeah, that's a big thing. The taxes too aspect of it. I understand. I mean, you live in Zug. I felt like all the interesting, impressive people I met in Switzerland lived outside of Switzerland, and that being kind of a big component. On the family offices, when people talk about governance, structure, and frameworks, one of the more interesting questions is what happens when that governance doesn't really hold up so well. What are your thoughts with regards to blind spots, poor planning, infrastructure? What do you have to say about that?
It's a loaded question, and we could probably be here for hours discussing it. But I think every single family office is different, right? And you can compare the single family offices to the multifamily office world as well. But I think a lot of the blind spots come from the psychology behind the interaction of the participants in the family office, in the family space. You can get to know a particular family very well, but you weren't there growing up. You weren't there to see the unaddressed trauma that potentially could have unfolded, right, during some of the actors' formative years. A lot of times in family offices, that comes to light pretty quickly. It comes to light in investment considerations. It comes to light in, who takes over, how, in what capacity. So from a psychological perspective, there's an incredible amount of blind spots that it's very difficult to prepare for. You just kind of have to react.
Right. Yeah. And that's, which is something you do. You advise, you referee a lot of this, a lot of the time, right? They bring you in as an advisor for deals, or, you manage a couple funds, work with funds. Yeah. How has that shaped out with you working with some of these family offices? What have you found that works?
I think the most productive manner in which to approach it is to share your experiences. I think a lot of these families can learn what to do in their own family based on what other families do and how other families handle situations. I think, to interact with them has to be in a learning experience, not only for me, but for them. I think that several of the families that I deal with now, you can't even imagine some of the things I have to deal with. I mean, it's acting as a translator from generation to generation. It's acting as a mediator. It's acting, as a person that, has to handle the various intricacies of disputes that currently are ongoing or that, as I mentioned, have happened in the past. So, you have to remain as political as you can. You have to focus on the solutions. But these issues rise up all the time with several of these families,
I like the idea of giving an experience, right? Because it's one of those things where you don't want to get too deep into the drama where you become like another player in it. But then you also, it seems like being the most sincere will help them hear you out sometimes. What can you talk a little bit more about how you've successfully navigated some of like these really tough situations? Because yeah, it's family members, right? It's very emotionally charged.
A lot of these families want results, right? So to take both sides and to kind of reinterpret what both sides are saying, albeit useful, it doesn't, generally speaking, generate results,
Right.
So I think you have to make sure that you have a view, that you take all kinds of opinions into consideration, you observe all kinds of sensitivities that could be or could come to light. But at the end of the day, you have to give your own professional recommendation as to what's right, what's wrong, and what's the preferred course of action. So I think, you have to be results oriented and help them resolve the issues at hand.
Has there been a situation where that really became a struggle, or maybe sometimes somebody had to step out, or where you had to resolve and it was kind of on the brink? Because I understand that happens a lot of the time too.
It happens, and I think this is where families and family businesses, whether they be family offices or family businesses, I think have to define what success looks like, and sometimes redefine what success looks like. A lot of times families believe that success is, let's all make sure somehow in some way, shape, or form we get along, we all hold hands, we all sing kumbaya, right? But some of the most successful families and family businesses have either been sold, folks have divested from, and most of the time where it becomes impossible to work together as a family, or you see that perhaps the next generation isn't prepared, is for folks to divest. I mean, some of the happiest people I know come from these wealthy families who, have completely exited the business that their family started, ran, and they view that as a success.
Certainly, and I think a big topic and area of interest for me and you is the next generation. A lot of the time, it's personalities, and it just doesn't work, right? Father to son, grandfather to grandson, and they're just not equipped to take on the business. There's a million reasons for that. What about those situations where you have a prodigious or really talented next generation coming in, and they see something in AI, or they see something in blockchain, or some next gen technology that the matriarch or patriarch is like not aware of at all, and it actually, there's a lot of potential, but it's a little risky. Have you navigated that before?
Yeah, I mean, I see that all the time, and I think it's a double-edged sword. I think it's very productive, and I've seen numerous examples where it's very productive to bring in the next generation as observers, as operators. If you see that they're super talented, prepared, following corporate governance rules, a lot of times what you'll see is that they try to take over the business or try to make decisions for their folks or their grandparents.
Like a power of attorney type of
Correct.
thing. Right.
I've seen innumerable cases where you had the next generations or younger folks trying to tell their parents or grandparents what they should and should not spend on.
Oh, wow.
That
That's
adds,
ugly.
Unfortunately, a certain degree of animosity to the relationship. But I've also seen cases where, proprietors of businesses and family offices completely ignore the next generation. And I think today there's, as I mentioned, a double-edged sword, but there's a balance where I think the next gen's perspective always should be considered, always should be listened to. And I think that's, in my humble opinion, for two reasons. One, a lot of what we see today, a lot of how the consumer is behaving, it's very difficult for some 50, 60-year-olds to see how that's growing. How things are marketed on TikTok, how things are sold nowadays. And I think having that segment give their opinion on what's evolving, what's new, is highly productive. Also, from a risk appetite perspective, maybe the next gen has no interest in preserving wealth. Maybe their interest lies in multiplying wealth.
Sure.
And I think if this is generational capital, more and more as the proprietor or patriarchs or matriarchs age, in reality, the risk profile of what's being managed, of what's being run, should translate and transfer into the risk profile of their heirs. At the end of the day, this is going to be their money. This is going to they're going to want to see it in most cases grow in a certain way.
Mm-hmm.
I've seen innumerable cases where the next gen comes in, each with their own advisor, with laptops,
Oh, no.
and they start, basically questioning the advisor, the current advisor, saying, this risk-adjusted return is just unacceptable. Where is the tech investment? Where is the cryptocurrency investments? Where are the AI investments? And they're nowhere to be found in most cases. So I think there's a great benefit to selectively listen to and incorporate the view held by the next gen.
And agreed broadly with that. And I that is happening a lot. You have these family advisors, they've been in there for 10, 20, 30 years, and then they're getting pressed by the next gen coming up. And it's a weird thing from the advisor standpoint, because odds are you've been doing your job pretty well and you've been helping grow the wealth of this family. And now you're getting chewed out because you don't want to throw money in Dogecoin or something. So I can see both angles. What do you think most families often need from an advisor to keep things moving along, to stay current? That's your expertise, really. You facilitate a lot of these relationships. And I guess this kind of puts a bow on the governance thing, because I think, you tell me, sometimes it's a matter of what's the mission? Like, how do they set it up right for a new family office coming in, or for a family that's trying to modernize, so they don't fall into disarray and have some of these situations?
I think you should start off with what you're trying to solve for. So what am I trying to do? And then analyze, how can I best accomplish that, right? So there's no one size fits all,
of course,
formula, but I think it's important to focus on, what are my goals? What do I want this to look like in 10, 20, 30 years? When you have a purpose, you find a way. Mm-hmm. So I think that is the number one focus. And then, the devil is in the details,
sure,
right? I think once you know what you're going to focus on, you're pretty much assured to find the path in some way, shape, or form.
And do you think that should start from a wealth preservation or multiplication standpoint, or should it be a little bit more deeper? Like Carol Lavin Burnick has this great family mission that she brings, and she brings like the notes that she brings to her families to the different conferences. I don't remember exactly what it was, but it kind of started from an emotional standpoint, which is interesting, and solving to make the world. She's obviously very tied into philanthropy. Do you know any examples or families that you can think of, be comfortable saying that it's like, these guys just do it right? Like, yeah.
Again, it boils down to what you're trying to solve for. And why do I say that? Because I encountered a family in the U.S. They, were commenting on how the patriarch started the business. And he was very purposeful. He said, I started a local real estate business, so none of my family members would ever have to go on a road trip or get on a plane for a business trip. His main focus was making sure that his family was united, that his family were close, and that the family spent a lot of time with their own family. I thought, considering I live on a plane, I thought it was
nice,
incredible.
Yeah.
Right. So I think, what you're trying to solve for, what your goals are, goes beyond an asset allocation conversation, right? I think that's just a portion of the work that you need to do to understand the family, to understand the goals. Some families, believe it or not, aren't even focused on performance of the financial assets.
Yeah.
So I think it's very, very important to detail the goals, and that could be, from a financial perspective, from a psychological perspective, or from a family perspective.
And last bit here, I just thought this up while you were bringing it. Maybe the most important part is, how do you keep the next generation like, how do you keep them involved? Obviously there's no one size fits all answer, but do you have any opinions on that, or things you've seen where it's like that's a good way to do it. Go about it.
Again, it depends on the personality, but I think there's value to the next gen and value to the proprietors of the business or the owners of the family office to make sure they're engaged, that they know what's where and why. I think it's extraordinarily important. I can't tell you the amount of times where I see a succession issue and no one knows where the assets are, why they existed, and it takes years sometimes to uncover this.
Right.
So I think in order to make sure that that doesn't happen, you have to keep them engaged. You know, their specific interests. Sometimes I see that the next gen is focused on experience or athletics. You know, there's always way to tie in family governance, a family structure, whether it's a family office or an investment thesis, to the interests of those individuals.
Yeah, 100% agree. And it's almost tough to give advice or a solid, right? Like I've seen this done because you're right, the personalities are so different. And let's pivot more towards the investment direction, right? You're onto a new chapter. You're moving back to the U.S. Tell me some of the funds that you're working with, advising, what their focus is. Tell me a little bit about that.
Sure. So as I transition back to the U.S. Over the past months, I've been working in an advisory capacity with a few young fund managers. One is even your age, based in Geneva. Juan Pablo runs a strategy called Ametry.
Okay.
And he is looking for asymmetric, uncorrelated returns. I think nowadays, when you see valuations where they are, where you see high correlations in asset classes, to have non-correlated assets, whether they be non-financial assets or financial assets, it actually cuts the correlation of the holdings of some of these families. So he runs an incredibly interesting strategy there. For such a young age, he's managing right now over 1.5 billion. And, you know, my idea in supporting him is, you know, he's growing now, increasing AUM, hiring a team, and evolving from a fund manager perspective. So for me, it's an incredible project. I'm capable and willing to and have the honor of helping someone that I actually hired over 15 years ago.
That's how you connected with him.
Yeah.
And are there, I think you said 2 or 3 funds.
Right.
Are there any more like local in the U.S.? I think you mentioned to me that there was someone on the West Coast too.
There's one that I'm helping that's based in Cambridge, Massachusetts. His name is Devon Triplett. You know, he is looking to find companies that have $1 trillion potential, foundational companies that employ AI, and they're usually the first check-in. So for me, it's also a way when I decide to help an individual manager, it's also a way for me to really get an in-depth knowledge into what they're doing and why they're doing it. And so for me, it's incredible to have access to Devon and his team, which is astounding. And, you know, he's only 24 years old.
Wow.
And he's probably going to end up raising close to 100 million, if not 100.
Holy cow.
Yeah.
What's different with this new generation? It sounds like you're mentoring a couple of really impressive people. What's different from your view about this new generation of founders, fund managers, and innovators?
You know, I think what's different is they're much more willing to accept feedback, think outside of the box. None of the folks I work with think they know it all. They really have personalities, and they also do a lot of work outside of what they do day to day. I focus a lot when I analyze how I work with someone in what their interests are, how they interact with their family. It shows me a lot about their values. And I think it's very easy to assume people act and behave in a certain way, but you don't really see how people behave in situations that are complicated, that are adverse.
Pressure tested.
So when you've seen that, whether you see that at the family level, at the personal level, and you see how these folks resolve it, it's very important to see that they have a capacity to bounce back, that they have a capacity to pivot. As a young manager, you're going to need to learn and know how to do both very well.
Yeah, you're going to take a couple beatings too, and I guess that, and especially in this space.
Yeah, especially if you haven't seen a cycle or two.
Right, right.
Yeah.
And a lot of the young guys haven't. And I'm interested too. First-time fund managers. I work with a couple of them too. What is your? It's interesting. I don't know where to start on your approach to, because a lot of the time I find I'm telling clients like to hold back the reins. You're not really. Sometimes they're not ready for the Super Bowl yet. And you have the gem. You have this great idea. What are some ways that you, I guess, going more into the day-to-day type of work with these guys?
And to your point, I think that's an excellent point. A lot of these folks, when they're very young, you come out of school, you have success in a very short period of time. Sometimes you think you can take over the world,
Yeah.
and sometimes you're involved in a space where that actually could be possible.
Yes.
You try to, generally speaking, rein in that ambition as careful as you can, right? Because you don't want to dull the excitement, dull the energy.
Right.
But you also want to bring them down to earth.
Right.
So the other day I had to tell one of them, look, you need to crawl before you walk, and you need to walk before you run.
Right. And because you have experience with these guys, they can handle that. Okay, Paul, I'll take it easy.
I think generally speaking, they know I'm coming from a place where I'm telling them what I'm telling them for their own good.
Right.
And not because I want to stake in their business or because, I look to profit from what I'm advising them.
Right. Yeah. You want to help. You want to see them succeed. And it's funny too, right? Because a lot of this is across the board. The advice that works with family offices will also work with new founders, and vice versa a lot of the time. Because you have family going on, you have business. They're tied together. They affect your day-to-day, your performance. Something I do a lot is I introduce founders and fund managers to family offices, right? Mm-hmm. And vice versa. What advice do you have for founders or fund managers that everybody wants money from a family office if they know what a family office is, right? When they're raising. What is your advice to help them there? Because most times it's not successful. I think they're kind of talking past each other. I'd love to hear your thoughts on that.
Look, I think it's especially now with what's happening globally, I think it's a very difficult environment to raise capital. Having said that, there are specific opportunities and asset classes that benefit from an incredible amount of headwinds that benefit from the trend over the next 10 years. Mm-hmm. I think it's very difficult nowadays to get funding in the tech space unless it's AI related, for example. It's a lot of VCs and a lot of investors don't even want to talk to you and entertain an idea unless it's AI enabled. I think, and again, this goes hand in hand with capital raising, but I think it's important to focus on the value the partner can bring outside of the capital. Mm-hmm. I think there continues to be a lot of liquidity, even though it becomes a difficult environment to raise for. Having said that, I've seen it all the time. It's happened to me. Sometimes you want people involved that shouldn't be involved in your cap table. Sometimes you have people involved that at the beginning have the same vision as you, but then as the cookie crumbles, that vision changes over time. Mm. And what I would tell founders and folks in looking to raise capital is be very protective of your equity. Be very careful to curate your team as carefully as you can. Be careful, how you grow, and make sure that you stick to your values. Mm. I think it's important, and sometimes it's easier said than done, but I think that's truly important, especially if you want to get out of the gates and build a lasting business.
And is there a quality, and you maybe touched on this a little bit, about finding people that you mentor and work with and will partner with. Is there like a test that you have or a standard when you're vetting people? Because you're a sophisticated allocator. You've seen a lot of BS people. You've seen people that are serious and in between. Is there something you have that you like a stand? You know what I'm saying?
Yeah. Look, I think generally speaking, I really truly try to get to know them. I try to see how they eat, what they eat, how they speak to people, how they treat others. I try to also see them as individuals, because a lot of this is emotional. And you have some really smart people that sometimes can't interact with others. You have other people that are commercially incredible, but add zero substance. So, I try to make sure that, the values are there, that they have great energy. They have to think they're great.
Yes.
Right?
Yes.
And you can't teach that. If you're not excited about what you're doing, I'm not going to be excited about what you're doing.
That's right.
Right. So I think great energy, incredibly smart, off the chart smart, generally speaking, creates incredible results.
That's so true with people who are just incredible minds that cannot socialize.
Yeah.
You can't bring them out. They get literally,
which is fine if
It is.
they fulfill their role.
If you get the right partner.
It's okay, but you have to have. Revenue cures all, right?
Yeah.
So,
yes. No, that's an excellent point. Let's go back, because on the case of allocators, right? Being a sophisticated allocator, what do you think is something that emerging funds or founders often miss that like you spot immediately the second you dig deeper or have that conversation that kind of gets lost sometimes in the ether?
I think it's important to be consistent. I see a lot of decks where there isn't consistency, and there are just things sometimes that don't make sense. So I mentioned I'm from Venezuela, and in the past couple of years prior to what happened in January, you had a few companies that really did incredibly well. One in the payment space, which is buy now, pay later type of arrangement. You had one that is in ride hailing, as an example, in delivery. And I remember reading one of their decks at the beginning, and they put the next unicorn in Venezuela, right?
Bold?
Not bold, just delusional, right? At that particular point in time, that should not be on your deck.
Right.
Right? Ambition, energy is great, but to a certain extent.
Right. Although I'm sure they believed it.
I'm certain they believe it, and probably now more than ever.
Right.
Now it might be a probability, but back then it was just, it wasn't feasible.
Right.
And I think a lot of entrepreneurs, it's okay to build a company and sell it for 30, 40 million.
Right.
Not everyone has to build a unicorn or even $1 trillion
company. This is such a good point.
So it's okay. You can build 4, 5, 6, 7, 8 companies and sell them for 10, 20, 30, 40 million and live an incredible life and have it be extremely rewarding. But I think, when we put labels on things like unicorn and everything, and, you can't have everybody shooting for those type of results.
Right. And it does get overused, certainly. I'm glad you brought up Venezuela, actually, because I want to talk a little bit about that, because you're a family guy. You talk a lot about values, and I think your background's interesting. So why don't you tell us a little bit about your family, the progression to New York, where you grew up. Tell me a little bit about that.
So as I mentioned in our previous chats, Ryan, my father is probably the most conservative rebel I know. And why do I mean by being extraordinarily conservative and being a rebel at the same time? So he is not a risk taker at all. Having said that, in his early 30s, he decided to move his family to New York. This was a time when Venezuela really was booming and New York was bankrupt. So, he didn't necessarily come here for a better life. He came here for a different kind of life.
Right.
And as one of 9 siblings, and then just on my father's side, I have 37 cousins, right? It was impossible for all of us to be involved in the family business.
Well, a very successful family business.
In a few cases, they were successful, and in a few that
how it happens, shakes out. Yes,
they weren't as successful. But so for an extraordinarily conservative person to take that risk, often he looks at me and he sees my risk-taking capabilities, and I always remind him of the fact that he took an enormous risk.
Oh, yeah. Not conservative at all
Not
with the
conservative
family.
at
Yeah.
all with the family, starting a new family. So I think that shapes you. I think one thing that both him and my mom instilled in my sister and I is not only the values, to stand up if a lady approaches the table,
Sure.
to stand up, with good morals and good values, but also their focus on discipline. I think if you want to solve for something and you want results in life, you have to have an incredible amount of discipline. And discipline requires acting and working sometimes when you don't want to.
Mm-hmm.
It requires you to make a plan. It requires to define what you're trying to solve for in a very meticulous way. So I think those values, translate to the risks I've taken. Very interesting story. When I moved to Switzerland, I moved there with JP Morgan, as you mentioned. And the reason I decided to move to Switzerland is very funny. Even though I was afforded this incredible opportunity to work with what I think is still a great firm today, I had dinner by myself when I went to Geneva and ate there. And a friend of mine made a dinner recommendation. And, at the time I was engaged. I was looking to change jobs. And I'll never forget, I had a meal by myself. I preferred to eat alone than with the folks that interviewed me. And I said, I have to go to this place and I have to try this dessert. And it was these profiteroles that had ice cream in them. And I remember having that. I'm like, these are the most delicious profiteroles I've ever had in my life. So I'm walking back to the hotel and I call my mother and I said, I think I'm moving to Switzerland. She goes, oh, did you love the job opportunity? I go, no, but I just had the most delicious profiteroles I ever had in my life. So, you get signals in life that lead you to make certain decisions. And whatever the motivation is, whatever you're trying to solve for, sometimes the cookie crumbles in a different way. But if you focus on what you're trying to solve for and have the discipline to put in the work and analyze the opportunities, generally speaking, you end up with pretty good results.
That's funny. I'm glad you saved that. I did not know that about how. I just thought you went over for JP Morgan. I mean, I guess that helped, but it's really about the dessert.
I mean, look, it was a great job opportunity as well, but what sealed the deal wasn't an elevator pitch by anyone. It was an incredible restaurant in a magical place, which I've called that country home for 15 years, and it's been an honor to
It is
to
beautiful.
be there.
And the food in Geneva was incredible.
Yeah.
I wish I had that though. But I like the idea of like listening to signs. I mean, because that was the takeaway, right? And it sounded like you had a good interview. You had something waiting for you there anyways. But that's what in your mind made you say, I'm in. I'm staying here.
Yeah, and it's and it had nothing to do with the job itself.
Right.
It had nothing to do with my career. It just, I felt that was a great place to be at that particular point in time in my life. Just as I feel it's going to be very productive and interesting for me to move back to the New England area.
And agreed. And closer to New York City, obviously, as well, good for business. Mm-hmm. Is there some things you feel that, and the world's changing all the time, right? But what do you think has changed? And I know you come back and forth, right? But has the city changed? What is your view on doing business here? Raising capital, it's a tough time, right? Yeah. Is something excite you? Are you going to miss parts of doing business over in Switzerland? Or are you more excited that you're coming back here?
Look, I'm very thankful for the experience I had in Switzerland,
sure.
But I'm very excited to come back. I think here there's a velocity, a entrepreneurial nature of folks, a risk-taking nature that I miss. I think New York, it's interesting to see how the cookie has crumbled over the past 15 years.
Yes.
And I think this is, I'm biased, obviously. I grew up just 30 minutes from here, but I think this is the best city in the world.
I agree.
I think it's an incredible place to have a career early on, mid-level, senior level. It's a great place to raise capital. And I think despite the fact that you hear a lot of noise behind people moving, look, I think it was an interview that I saw recently with Gary Vee where he compared, New York to Miami. And then unfortunately for me, he compared it to Boston. And he said, New York is the Premier League. It's the NBA,
Yes.
right? Miami, it's college basketball.
Yes. I
And
tend to
Boston
agree.
is high school basketball.
Yeah.
So, I think that's, a gross overstatement, but, it puts things into perspective. I do think this is the financial and continues to be the financial capital of the world. The talent here is incredible. And I think there's a lot to do here, regardless of the sector, regardless of the space. I think as a 20-year-old today, I wouldn't move any other place if I wanted to get exposed to a specific industry culture. I even had a friend growing up, he's Canadian, and he really, after he graduated, he went to school in Liverpool, he wanted to move to Canada. And I told him, look, why don't you move to New York? His mom kind of, entrusted me with trying to convince him to stay in the New York area. And I think it really made sense, not only from a family perspective, but also from a professional perspective. I said, look, you want to be a sound engineer. Become a sound engineer, train to become a sound engineer in New York. And I guarantee you, wherever you go outside of New York, you're going to be in the top 10 sound engineers.
Yes.
And to this day, he moved to Canada.
Okay. Finally got there.
Finally got there. But prior to moving there, he had an incredible experience here in Sony Music.
Oh, wow.
So he has an incredible background, training, exposure that he's just not going to get in Canada, but that makes him an extraordinarily valuable asset in Canada.
Certainly. And your answers are so great. I have some other questions, but I feel like you kind of already answered it. So I guess and we're approaching that time. Well, I'll just give you a couple of quick ones. So if a family office principal is wanting to, if they're listening, right, and they want to try and involve the next generation, what advice would you give them?
Listen to them. Listen to them. Really listen to them. Don't dismiss them because of their age. Don't dismiss them because maybe from a talent perspective, they're not where they should be or they're not where you want them to be. My mother called me in 2003, I believe it was 2003, 2004. Google was IPOing.
Mm-hmm.
And she said, I want to participate in the IPO. And I said, nah, don't worry. She, even though it was an econometrics major and got her master's, et cetera, she had no experience in investing in the markets. But at the end of the day, I dismissed an idea coming from her because I didn't feel she had the background or capability to make that assessment. Again, she probably had no idea what Google did back then either.
Right.
She had no idea the numbers or the opportunities. But I think, the important part is to listen, listen, to analyze, not dismiss ideas that, for whatever reason, for whatever blind spots that you may have. I think, some of the best investment ideas that I've missed them because I've dismissed people. So I would recommend that they not do that, that they obviously manage expectations,
right.
Make sure that they're not overruled or that the next gen, doesn't try to unseat them or usurp them. But, I would encourage them to listen.
Great answer. And a couple lightning round ones, right?
Please.
What's one mistake that you're glad you made?
I think mistakes from an investment standpoint or at a personal level are, not seeing the blind spots. When you overlook things you probably shouldn't have overlooked. And I think one important thing that I've realized at a personal level is people don't change. When a particular person engages with others and treats people in a certain way, just because they haven't treated you in that way doesn't mean they aren't like that.
Mm-hmm. Mm-hmm.
And experience has taught me that, people are the way they are. And even if they're not like that with you, eventually they can be. And sometimes they have been. So the mistakes I've made is probably being too trustworthy of folks that I thought were worthy of my time, worthy of my partnership, that, perhaps I should have seen a little bit and analyzed their behavior in greater detail, even though they weren't like that with me.
Right, right. That's pretty good. Solid answer. What's one sentence from your parents that really shaped your life?
Get up and do it again.
Okay, okay. What's one thing you would never outsource, no matter how busy you are?
Values,
Mm.
talent.
And when are you most proud of who you are?
When I see my kids.
Excellent. And thanks again. This was so great, Paul.
Oh, thank you.
If people want to find you, and we'll put show notes on, who do you want reaching out to you? And who would you be interested in talking to, and how can they find you?
You know, I'm happy to speak to folks that have issues to resolve. Normally, the value I can bring to the table from an advisory standpoint are families, investors, portfolio managers that are trying to figure things out. I think it's a lot easier to add value to people that are in a difficult situation, that are in a complex situation, that want solutions, and not necessarily with people who think they have everything figured out, right? Folks that I love working with too are generally speaking folks that, you know, have had some hiccups, have had some licks, and, you know, have gone through tough times. I think that builds character and shapes us into different humans. And it's very entertaining, interesting, and value add to work with folks like that. So,
Excellent. This was great. Thank you so much, Paul.
thank you, Ryan.
Appreciate it, man.
Take care.